What does higher inventory and more home sales mean as we head into the spring market? And more importantly, how's it going to affect pricing? My name is Jeremy Williams with the Bannack Real Estate Group, and each month we try to provide hyper-local information so you can make smart decisions whether you're buying, selling, or investing in real estate. The trends are changing. It's important that you know the numbers, and most importantly, how it affects you. So let's get into it. Let's start by looking at the numbers. Currently there's 228 houses for sale, which is actually 33% more this month than there was last month. What we're going to start seeing is a normal cycle for the next couple of years as the market normalizes and gets used to the new prices. So what that means is a slower winter and a ramp up in the spring and summer. So we're starting to see that spring inventory come into the market. What did that do to the pendants? Well, the buyers responded. They showed up and purchased more homes. So actually our under contracts are up 141% compared to last month. So as more houses come on the market, more are getting absorbed by the buyers. And there were 79 homes for sale last month. I do expect that to increase dramatically over the next few months. One of the tools that we have to look at how these current trends affect our real estate market is absorption rate. Absorption rate is basically supply and demand, the number of buyers in the market compared to the number of sellers at any given time. Well, right now it's still a very strong seller's market. So as more homes have come on the market, more have been absorbed by the buyers and is actually pushing it stronger into the seller's market category than it was last month for 2.38 months of inventory compared to over 3 months of inventory last month. And in addition, if you're looking at anything under 700,000, in some of these marketplaces, there's less than a month or a month worth of inventory. Very strong seller's market. But the increased inventory is a good sign. It should make it a little bit easier to get from one house to another, or if you are buying a house, you should have more options than you've had in the past. Another tool that we're looking at is what we call list the sales price. It gives us indication whether prices are going up or going down. Last summer, we had 100% list the sales price on average, which means on any given month, the seller was getting what they were asking for it. As we hit winter, that went down to 97%, and it was the same for last month's sales. I do anticipate, because of the absorption rate going down stronger into a seller's market, that list the sales price is going to start going up as we head the spring to summer. In fact, we're already seeing multiple offers in certain properties. What do these numbers mean? Well, if you're looking to buy a house, you're going to have more options on the market than you had last year, although in certain market segments you still may be competing. We're seeing multiple offer situations, and it's also going to be a little bit easier if you're a seller to get from one house to another. You'll still get very strong value for your homes. I know I've talked to a lot of people and they say, well, we're going to wait for homes to come down, or we're going to wait till interest rates come down. And I do want to warn you on that. Where we started at good valued houses, meaning the sellers have been a little bit more negotiable over the winter time, as we head into the spring, I expect properties to appreciate again because of our low absorption rate, really driving down into the low numbers for the seller's market. So what does that mean? Well, as the year goes by, the houses are going to get more and more expensive. So if you're looking at a $500,000 house now, by this time next year, I imagine that same house is going to be $525,000, and the year after $550,000, the way the trends have gone. I don't think we're going to see large appreciation numbers, just steady. I expect a few normal markets, just as the inventory, the buyers, the sellers, everybody gets used to the new market we're in, and it's just going to normalize for a few years. Also, we hear a lot of people waiting for interest rates to come down. I don't expect that to happen at a high level. I do expect them to come down a little bit, but I'm not as bullish of seeing them down in the 5s. The reason for that? Well, we got to understand why the interest rates are what they are and the government's stance on it. So the government wants us to pull back. They don't want housing to get too expensive. So they're pulling back everything to try to curb inflation. If they do something that's going to cause rates to come down too fast, that's just going to cause the prices to go back up. And it's really counterintuitive of what they're looking to accomplish. So with that, rates are what they are. We still have ways to negotiate and get good values, and there's actually tools that we have that could get buyers into a more affordable rate than what it looks like on the surface. So expect a normal real estate cycle. Normal's good because it allows us to plan and understand what to expect in the future, but also expect a few more options than we saw last year. If you have any questions, reach out to me. You can reach me at 406-531-1519. That's my cell phone number. I'm always open for questions, and I look forward to talking to you soon.